Okay, everyone, we're back with another video. But before we get into dividend investing, before we get into all that other type of stuff that we normally talk about, I want to mention real quick, I want to give an announcement on the channel, something that's completely unrelated to the stock market or dividend investing. I just wanted to mention that I'm officially engaged to this beautiful girl right here. I haven't publicly announced this on the channel, but her name is Katie, and we're officially engaged, so that's my beautiful fiance. So I just wanted to give a quick shout out to myself for anybody that cared. And yeah, there's my fiance. So let's go ahead and get started into the video. So we have here my portfolio, and I'm a dividend investor. And I have 24 companies in my portfolio. And as you guys know, I only invest in companies that are dividend growth companies, looking at expanding their dividends every single year. And something that I've considered going into the new year, and you guys let me know what you think, because I'm considering doing this, taking a small part of my portfolio, say something like $500 to $1,000, and just for a fun little side project and also to give some more content to you guys, start a growth portfolio. And the reason why I wanted to do that was to show you guys different investing strategies and also give myself some exposure, a very small amount, some small exposure to some companies that do not only pay dividends. I think it's important to invest in any companies that make yourself money, and I think that dividend strategy is the strategy for me, and I'll always put 90% plus of my money, if not 100%, just into dividend growth companies. But I have been interested in some non-dividend paying companies, so let me know down below what you guys think if you would like to see that in the portfolio. But going into the video, I have 3 companies picked out. And the 3 companies that I picked out, that if today I was starting a growth portfolio, these are the 3 companies that I would pick, and I'll go over just my basic investing reasons why. Now, I want to talk about these 3 companies, and I won't be focusing so much on the numbers today. I know a lot of times I like to focus on the numbers, but the valuation of the company. I want to focus more so on the story behind these companies. We will talk about the numbers a little bit, but the 3 companies that I chose is Rocket Mortgage. They're a new IPO. The funny thing is actually 2 of these companies are IPO, I believe, this year. Rocket Mortgage is the first one. The second one that we're going to be talking about is very similar type of business model, type of growth strategy. We're going to be talking about Lemonade. And then the third company we're going to talk about is one that I mentioned a lot here on this channel. Has a lot of backing behind it for celebrities, through investors, and overall just their global change that they're trying to make throughout the world. But Beyond Meat is a company that I'm very bullish on for the long term. So it's going to be a fun one, guys. I'm also going to show some numbers behind them as well. But I'll get into these 3 companies and why I'm bullish on them on the long term. And if you're not familiar with me, my name is Jordan. I'm the Millennial Investor, and I update these charts every single month involving my annual and monthly dividend income, my portfolio value, and even show my monthly YouTube income. All of this is disclosed on the channel, including all my buys, my sells, my dividends, everything that you could possibly imagine, all included on the activity feed that I show every single video right here. And if you want to get signed up with M1 Finance, which is signing up and depositing $100 to the platform, you can do so, which is down below in the description. You'll get $10 just for getting signed up and depositing $100 to the platform, and as well as other things down below, including my portfolio if you want to invest in it yourself, and other things as well, including auto savings accounts, credit card referrals, mentoring calls so you can speak one-on-one with me directly through the cell phone, and lots of other stuff. So go ahead and check out that stuff, guys. Thank you guys for tuning in, and let's go ahead and get started. Now, one company that has really interested me lately is Rocket Mortgage. This company just recently went public, and it is one of the few companies that I can find that is not at a ridiculous valuation that is at a company that has had a recent IPO. Now, one reason that this company really stood out to me is that as a customer, this is something that I'm going to be looking at using soon. Now, I did just mention a few minutes ago that I am officially engaged, but something that's really important is that I just finished another college semester just last week. So I now only have 3 semesters left till I'm officially graduated from college, and I can go about getting my career started. And more importantly, what I can get started is looking at buying my first house. And one thing that has really interested me is Rocket Mortgage. It really gives a compelling valuation for an investor, but not only that, it really is interesting as a consumer, as a customer for Rocket Mortgage as well. I heard that typically they have a lot lower interest rates because they don't have the type of overhead that a lot of other banks do, and overall the experience is very compelling and very easy, especially for someone my age that's 21 years old and usually is able to use technology pretty easy. Now, if we go back to this company, we go to their homepage, their investor relations page. If you scroll down, let's look at some key metrics here. Their third quarter year-to-date 2020 mortgage originations was $213 billion, and third quarter year-to-date 2020 total revenue was $11 billion. That's 4.6 times the industry average refinance retention rate, and then they have 22,000 different team members. And then on the Why Invest section here, they have 4 different categories, and the main ones that I want to focus on are these bottom 2. They have multiple drivers for profitable growth, and then they have constant innovation. And if you're investing in this company, this one that I'm highlighting, constant innovation, is the main reason why you should invest in this company. They are a disruptive company, much like what we're about to get into with the Lemonade, a completely disruptor for the insurance business. This is a disruptor for the traditional mortgage business. This will give new millennials, a new Gen Z generation, as they go to start buying homes, this will give them an alternative to go into their local JP Morgan Chase or their Bank of America or their Wells Fargo or their local credit union. They can literally do it through a mobile app. So this gives a pretty compelling argument for a generation that lives off their cell phones to get their mortgage signed up at ease, just sending their information all throughout their cell phone. Now, something that's really interesting with this company is the revenue growth. Because when you're looking at these companies, main thing that you want to focus on for growth companies is revenue growth. And this company has it. This company already has revenues in the billions of dollars. What I want to focus on here is the second column, because this is the 9 months ended 2019 and 2020 numbers. In 2019, for the first 3 quarters, the first 9 months, they did 2.2 billion. The next year, as in here in 2020, they did 8.8 billion. That is about a 4 times in roughly a year. That is insane growth for just a mobile app. So this is why this company is a lot more than just an idea for a lot of younger people to get mortgages. This is an opportunity that people are really starting to take advantage of. So Rocket Mortgage is one that I'm really interested in, a disruptive company, one that I'm interested in as a consumer, as an investor. And if I were to invest in a growth stocks, this is one that I would definitely look at, especially considering it's one of the only 3 on this list that actually has a reasonable size net income. As you can see that they actually have earnings per share on their balance sheet and on their income statement. So really compelling valuation there. Rocket Mortgage is one that I would take a look at. Next, we have one, once again, that is at a very similar state of disruptiveness through a mobile app. We're looking at Lemonade. In the same way that I said a Bank of America will be disrupted by a Rocket Mortgage for their mortgages, or JP Morgan Chase, or your local credit union, or whatever, Lemonade is going to do the same thing for that of an Allstate, that of an Aflac, that of a State Farm, whatever the case may be. This company has completely changed the game on insurance. Right now, they primarily focus on renters insurance, and they're just a small startup with a huge valuation on top of them of over $5 billion. Now, the one thing I will say about this company, speaking of that valuation, is that it is extremely rich. A $5 billion market cap is extremely rich. But the opportunity is that this company could grow well past that. Now, when we look at the numbers for this company, you're looking at year-over-year growth. They did 41.6 in net revenues, or net premium, I should say. And then next year in 2020, for the first 9 months, the first 3 quarters, they did about a 50% increase, up to 65 in net earned premium. This company is growing at 50% plus on an annual basis. Now, right now, the one thing that I don't like about this company is that they're a big money loser. And that could make this company face some huge downsides if we were to have a big downturn in the market, or if some revenue growth were to slow down for this company. But one thing that's really interesting is that this company, if you want to just read about the basics of their company and their mission behind their CEO and the company as a whole, it's really interesting that they're completely changing the game on insurance. Now, right now, their main focus is renters insurance, but they're also looking at expanding into other products as well, bundling up your car insurance and maybe even your home insurance and life insurance and other things like that as well. But overall, I like the insurance business in general. And I think, as always, insurance companies are always going to be turning a profit because they're always going to be selling their premiums higher than what they're going to be paying out. So insurance companies, a very profitable business. That's why you have so many different competitors out there from the insurance business like Aflac, Allstate, State Farm, so many other big names out there. And that's why they're some of the largest companies in the world. But Lemonade is a very compelling company with a very high valuation and great growth. While it is a money loser, it could have great opportunity for the future. Next up, we have the one that I've talked about the most as far as growth companies go on my channel. We're talking about Beyond Meat. I've made 2 videos about this company in the past, and it's so intriguing to me. You know, this is not the type of company that I would ever invest in the dividend growth portfolio, because obviously this company doesn't pay a dividend. It's not anything that is like the norm of what I usually invest in, but it is a company that I see a lot of potential in for the future. This company, you want to talk about rich valuations, this company has a massive, and I mean a massive valuation. And honestly, I think it deserves it. One of the ways that I see this company when you're investing in it, I don't think you should really be investing in this company for the potential for fake meat. Now, that's obviously a high growth opportunity, and that's icing on the cake. But what's really powering about this company is that if we go to their products here, their products have incredible branding. The branding power that this company is getting at a rapid pace is really, really interesting. And some of the deals that this company is getting with some huge names like Subway and McDonald's and Del Taco and Dunkin' Donuts and Starbucks and so many other huge names out there. You're not talking about a company that is trying to just barely fight for some market share. You're looking at a company that is beginning to dominate the plant-based meat category. I think in the long run, if this company continues to innovate, this company continues to have massive research and development opportunities and incredible revenue growth, I think we'll eventually get to the point where when you go into a store and you want to buy a soda, you don't buy a Coca-Cola for a taste, because you can buy a lot of knockoffs. Like, for example, if you want to buy a Dr. Pepper, you can go and buy a knockoff brand. You could go and buy a Dr. Thunder, or you can go buy a whatever brand of just basic Pepsi Cola, right? But that's not the reason that you buy a Dr. Pepper. That's not the reason that you buy a Coca-Cola. You buy the brand because you're familiar with it, because you trust it, because you drank it probably most of your life. Now, I believe that the same thing is going to happen with Beyond Meat. As they get more established, as they get more profitable, as they have more opportunities to grow their revenues, and then have their brands get pushed in the faces of more and more consumers, I think people will stop asking, what fake meat product should I buy? What plant burger should I buy? And the answer starts to become really clear. What Beyond Meat product should we buy today? Because they're going to continue to offer new products, including the two that I'm showing on this list. And then going to the numbers real quick. This company has incredible revenue growth. Now, if we look at the stock chart, if we look at the year chart right here, they did just have a recent massive downturn from $200 a share down to about $125. About a 40% downturn in just a matter of a month or two. Now, the reason that happened is that if we look at these year-over-year numbers on a quarterly basis, the net revenues barely grew. But that is just one small miss that they had over the course of 2020. If we look at the yearly numbers and we look at compiling the first 9 months of 2019 and 2020, this company did about $200 million in revenue in 2019, and then has bumped it up all the way up to $300+ million in revenue here in 2020. And that's even in the middle of a pandemic. That's when restaurants are shut down. That's when this company should be slowing growth. And you're still looking at 50% revenue growth for this company. I think that this company, as they just slowly begin to turn a profit, if we go ahead and look at this number right here, their EPS, their net income, for the third quarter of 2019, you see that they actually turned a small profit. And just because of 2020, they had all the shutdowns, that's been the one holdup for this company. That is not Beyond Meat's fault. But as this company continues to grow, and as the economy begins to open back up and restaurants begin to serve as normal, I think that this company will not only grow revenues at an incredible pace, I think 2021 and especially 2022 will begin to see quite profitable years. So that's a huge opportunity for Beyond Meat. They have a lot of celebrities behind it. They have a lot of global growth opportunities. They have a compelling valuation, and I think that this company has a lot of opportunity. Oh no, yeah, I just forgot to mention, as we see the homepage, this company also just announced a new partnership with Pizza Hut. So once again, just one more partnership that this company has, including the multiple partnerships that I didn't even mention in the video. But overall, guys, these are 3 companies that I would consider buying in my portfolio if I was not a dividend investor and if I was a growth investor. I just wanted to give you guys an insight on some companies that I'm interested in that I do not invest in because I'm a dividend investor, and I probably won't end up doing it unless I see some high demand. But let me know down below if you would be interested in me just having a small portion of my portfolio, like 5%, like $500 worth of investments, into some growth stocks, just so I can give you some guys some more information and expand my content a little bit. But if not, we'll stick with dividend investing. I'll let you guys decide. But thank you guys so much for watching all the way to the end. I invite you to subscribe if you haven't done so, and check out all the stuff down below in the descriptions like I mentioned, including auto savings accounts, mentoring calls, credit card referrals, M1 Finance, all that stuff. So thank you guys so much, and I'll catch you guys next time.